What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market close live stream where I will be going over Tesla and Google as well. I know I mentioned in my previous market update that I just posted that I am not going to be going live. That is still true for the earnings call, but I will be live for the actual earnings themselves because they are going to be coming out in about 30 minutes or so. So usually after 4 p.m. Eastern. I think Tesla is going to be reporting around 4:20 p.m. And I think Google is going to be around the same time, like 4:10 or 4:15 p.m. Eastern is when we're going to get the reports from both Tesla and Google. And so we are going to be taking a look at them together. So we'll take a look at, of course, the price action. We'll talk a little bit about the earnings themselves. I'll share my thoughts and everything that we need to go over for these two companies. So I'm here after watch the video or watch the live. That is a good question. I was thinking about the same question with myself, is that if I post the update and I'm going live at the same time, what are people going to be watching? I guess watch the live stream for now, and then you can go back to the market update because there's a lot of important information in there about of course, the bird's eye view of the market, the overall market themselves, which obviously does not change as much. So Tesla up over 12 basis points. We are more or less flat at the moment, and Google right now is also very, very flat. We've got about 8 basis points lower on the day. And of course, I've got the earnings correspondent open here on X. And as soon as the numbers come out, they're usually the first ones to post earnings on Twitter. So again, we'll be talking about that with the symmetrical triangle. They've also got that, and of course, a very nice potential uptrend that's also forming for Google. And there's a lot more companies. It's not just these two, but even Chipotle is going to be reporting earnings. So earnings per share, 33 cents per share. Revenue expected at just over $3.1 billion. Google, of course, it's just under $94 billion of revenue with $2.20 in earnings per share. And of course, Tesla is 40 cents in earnings per share with revenues sitting at just over $22 billion as well. So there's a lot for us to discuss here. And again, as soon as the numbers come out, I will break those down and share my initial reaction, my insights on these two companies. Google, I'm expecting for a beat. Tesla, maybe not so much, but again, we'll find out what happens in about 20 minutes or so, because this is a very, very important earnings call, as Tesla is certainly not on track to hitting their vehicle numbers and their vehicle target. And I'm really curious to hear what Elon Musk has to say about that as well, right? What's going to be the plan moving forward as he is back to, of course, helping out Tesla. He's back 7 days a week. Just back at Tesla helping the team. So, okay, let me just go over to the comments here very quickly. I've just joined you on Patreon. Love your channel. Best wishes from Lithuania. So thank you so much, Thomas. Really appreciate you. And thanks for joining. And we've got a lot of members that are ready to help. And, we're always supporting and helping each other. That's the philosophy of our channel and our community, is that we want to bring everyone together. We don't want to leave anyone behind. And if there's a question in the Discord, and we want members to be rushing to answer that, and so we can all help each other and grow together. So I'm sure you're going to love your time there. So let's talk trucking. If I subscribe to your membership, would you help me build my little $3,000, and what can I expect from that? So yes, I mean, everyone's got to start somewhere, right? I mean, just to give you a little bit of perspective, one of our members, Sandeep, shout out to him. He just crossed over 5 million, right? That's a huge achievement. He's sharing his entire journey on Discord. It's so inspirational. It's so motivational to see someone doing it so consistently over many, many months and building it through dedication, through actual sacrifice, and being patient and consistent. And those are the kind of qualities that we really want, right, as long-term investors. We don't want to just hit it big and be done with it, but we want to instill those qualities for long-term investing while also focusing on strategies that are smart, safe, and allow us to generate income while being very disciplined with proper risk management. So that's what we focus on. And it doesn't matter whether you're starting with $3,000 or $300,000 or $3 million, the core philosophies will always be the same, right? it's always going to require discipline. It's always going to require patience. It's always going to require proper risk management to get to where you want to go. So yes, our community, in my opinion, is going to be able to help you with that, with whatever questions you have, and we're more than happy to help. Mike says, I promise it was a joke. Didn't mean to guilt you into it. No, you're good. No, you're good. I know it is expected. And, a lot of people want to, this is a community thing, right? You want to be together when these earnings come out, because Tesla is a big part of our channel. Nvidia is a big part of our channel. Most Magnificent 7 and tech stocks are a big part of our channel. But to be honest, like, as I mentioned before in the market update as well, it's tough. Like, it's really tough for me, like being in a different time zone, to be up like 3 or 4 or 5 in the morning. And especially during the earnings season, it becomes more consistent where I'm not getting enough sleep, and then it becomes a huge issue down the road. I've done this before, 2021, 2022, even in 2023. I did a lot of live streams like market open, market close, market open, market close every single day. And it essentially leads to a burnout. And I want to do it for the long term. I don't want to burn out while doing this. And if I don't get sleep, if I'm not focusing on my health, it will eventually lead to burnout. And then it's either you get me during the earnings season and then you don't get me at all forever because I've burnt myself out, or I do it in a way that's sustainable. Now, like I said, I wish I was really in a different location. I was in Europe, or I was in someplace else where I could have done these live streams where it was like 5 p.m. or 7 p.m. would have been perfect. But I am visiting my family, and I'm coming here after 6 months. Last time I was here back in February, so I haven't seen my parents in over 6 months. So I had to be here, of course. So more than happy to, of course, be live and cover the earnings at least. Will not be live for the earnings call, but I'm more than happy to go over the earnings themselves, which again come out in about half an hour. And in the meantime, I'm more than happy to answer any questions. And of course, more than happy to take any questions for any specific stocks, before we get into Tesla and Google as well. Now, HIMS has been rallying. I have been rolling out my calls a little bit. I mean, HIMS is up over 16% just today. Massive move after the Novo Nordisk, collaboration breakdown. The support, of course, took down $50. We essentially got, sold off 34%. And from those prices, the stock is now officially up a little bit over 42%. So absolutely incredible rally. And it's been a very volatile stock. Not to mention HIMZ, it's up over 33% today. So absolutely insane momentum, with the next resistance and target is going to be at $64. I did roll out my calls a couple times today from 52 to 54, then 54 to 56. And I'm planning on rolling out my calls even further to potentially getting up to $60 or $62 for HIMS as well. So Milan just joined Patreon yesterday, and great to be a part of a seasoned investor Discord. Interesting first day today on Discord as well. Thank you, Milan. It was very nice to talk to you, and happy to have you on board. Let's see, open to $35. No way. Is it really trading at 35? Okay, I was gonna say, last time I checked, it was around the $4 or $5 range with a massive short squeeze happening on this stock. So yeah, I mean, $35 would just be insane. It would be like over a 20, almost a 15x from these levels, which would be just wild. But yes, it's seen an insane rally from half a dollar, basically 50 cents, all the way up to over $5. So that was an 800% rally. But just be extremely careful with these run-ups, right? They can be very, very volatile as stocks. So let's see. What do you think about NVTS? Megalith Walter says, come to Portugal. I really want to, and I'm planning on very soon. So there are plans that I'm making for Europe. I've been doing a lot of research, a lot of due diligence on a lot of different countries. So I am definitely making plans of coming to Europe. So that's my dream life is actually to be in Europe. I really like, the nature. I haven't been to a lot of places in Europe, but I have been to Switzerland and Italy, and of course the UK as well, and all of them incredibly beautiful places. And I really want to go to Lake Como, and of course I really like the beaches and the mountains as well. So yes, I'm planning very soon. We'll definitely message you when I'm there, and we'll do like a European community meetup as well. We haven't done one, so I think it's long overdue that we actually do a meetup in Europe, somewhere in Europe. That would be very, very nice, I think. Okay, so Ray, thanks for hosting Caddy. Wonderful about Hims, up 16%, looking to enter maybe within a week or so. Looking for a pullback or pull the trigger at around support at 52-ish. Yeah, we did get a big breakout on Hims, right? I mean, so we were talking about this resistance where we continue to struggle around $52 to $51, and today it just blew past that level. And if I bring over the volume, I mean, it's over 75 million shares, right? So it's like almost, by the end of the day, it's like going to be twice as much as the average 30-day volume. So that's a lot of volume coming in for Hims, which again confirms this breakout. Lots of momentum. Next target $64, and I could easily see it taking out all-time highs too, getting back up to over $72, $73. And so I'm planning on rolling up my call a little bit farther to capitalize on that potential upside. So yes, Netflix is in a little bit of a downtrend. I talked about this in our market update video. It's been breaking down after, of course, running for weeks, and it's right now trading at a support at 1177.78, all the way down to this right here is going to be that next support at 1100. So 1100 is going to be that next support in case it breaks down further below this support of 1177. So I'm going to try to get to as many questions as possible, just so I'm going to be able to answer everyone. What do you think about NVTS? I feel like I've done some analysis on this stock before. Market cap about a 1.6 billion, so that is pretty low. It could be a contender for some very massive gains. It's already seen some from its lows of May 21st. It's already up 375%. It's not a profitable stock yet. So again, one of our things to look for is consistency towards profitability, growing margins, a very, very defensible moat, large market, addressable market, and of course, growing market share. Those are things that you really want to look at from the company to better understand whether it has long-term potential or not. First things first, it's a defensible moat, right? You want to have a company that has a moat that just cannot be penetrated, right? That's what separates them from the competition. And the second thing is, of course, execution, right? You want to get, usually what I've noticed is founder-led companies actually tend to do a lot better than companies that were appointed management. So founder-led companies have that motivation, that ambition, that incentive to do well. And so those companies tend to do a lot better. So one of the things that I always like when I'm screening for stocks is companies that are founder-led, right? They're companies that are being still run by the founders of the companies, right? Tesla's a great example. Palantir is a great example. NVIDIA is a great example. So a lot of them are founder-led companies. So for this, again, moat, execution, and then of course, market share, fundamentals, financial performance, very, very important. It seems like the revenue's been going down. However, year over year, it's increasing a little bit, but profitability is in a little bit of a mix. So I would watch that resistance right now all the way up to as much as $10, $10 to $11. And it's a stock that we can certainly research into. But it does seem like there's been some short squeezes and a lot of momentum coming in, considering that it's a very, very small cap stock at the moment. ASML, I really, really like. So ASML is a stock that's part of my shopping list. So this is a stock that I absolutely love. It's got a very defensible moat. It's one of the only companies that's building these lithography equipments that are important for manufacturing of semiconductors. So ASML, I would most certainly, be an investor, right? Would definitely be looking to buy and even selling puts at lower levels. Now, I do believe that ASML could benefit from a stock split. So if you were to see a stock split of, let's say, 10 to 1 or even 5 to 1, I think ASML could benefit because the options chain would become a lot more accessible, a lot more easier to execute on. Otherwise, one contract is like 70 grand, which becomes a bit of a friction. If it were trading at $70, then of course it'll be a lot easier for us to trade options on ASML. GE Vernova. So let me just see what their actual ticker is. GEV. Oh my God. Wow. Up 15%, $170 billion. And wow, this is an insane stock. Looks like we have done some analysis on this in the past, but wow, 147%. Like this overall chart is insane. Like on the weekly time frame, from 2024, it is up a little bit over 450%. And that's really what you want to see, right? And whenever you look at a stock and you look at kind of like the technical analysis, always ask yourself the question, like, is this how your portfolio should look like? This is, think of it as like your portfolio line. And if this is what your portfolio line should look like, or this is what you want your portfolio line to look like, these are the kind of stocks that you want to be in, right? That have consistency, long-term growth, long-term success, and obviously you want to avoid things like, for example, this is just an example, right? But this is not what you want your portfolio to look like, right? You don't want it to go from top left to bottom right, which is a downtrending channel, which is a downtrending pattern overall of just declines and declines, right? You want something like this where it's actually consistently making new all-time highs, pushing higher, and of course going from the bottom left to the top right. That's how you want your portfolio to perform. Anyway, so guys, do me a favor, share this live stream with as many people as possible so we can actually take a look at Tesla and Google's earnings together. Again, there's a lot of companies reporting, so it's not just Tesla and Google, but we also do have ServiceNow, IBM, Chipotle. All these companies are going to be reporting their numbers right after the bell, and we'll take a look at what these earnings look like. Primary focus is going to be on Tesla and Google, and let's just do a quick poll on Tesla. Tesla earnings, let's see, beat or miss. Let's see what everyone has to say for Tesla earnings. Are we going to see a beat or a miss? I'll go over to some of the other questions as well. Does proliferation of meme stocks indicate greed close to the top, drop very close? I'm seeing a lot of them crop up in the last week or so. So, I mean, you could argue yes, because usually, when the markets are extremely greedy and euphoric, you see kind of like stocks that have no fundamental value or are basically rallying and ripping 300, 400, 500%, increasing a lot in market cap. It's like the last phase of a euphoric market because it's easy money. And when you are giving a lot of value to something that's worthless, that creates a bubble. And usually that happens towards, like I said, the last phase of greed and euphoria. So, this is something that we have seen before, right? If you remember 2020, 2021, we have seen the EV bubble. We have seen the SPACs and the brand new IPOs that are happening, right? And you're starting to feel a little bit similar to that. So our job is to, of course, not get sucked into a lot of this distraction, remain focused, remain calm, aware, and alert about what the actual market fundamentals and technicals look like, and be prepared. Yes, you can participate in this momentum, but you have to have proper risk management and with a full idea and understanding that, okay, even if I do lose this capital, it's completely okay. It's something that I can afford to lose, right? So not obviously putting in a big chunk that you can't afford to lose, but of course trading with smaller quantities that you're comfortable trading on that momentum, because there's still money to be made. You just have to be careful about it. So, but of course, the core of the strategy, the core focus always needs to be quality over quantity, focusing on high quality setups, high quality stocks for long term, and that's where our focus is always going to be. So we got 79%, a very, very a big majority of people expecting a miss on Tesla. Vault says, Caddy, how could you lie to us? You said no live stream and yet here we are. Joking, of course, but I missed first minutes because I was not expecting this. Yes, no, I did not lie. I will still not be live for the earnings call, but I am live for the earnings themselves. Obviously, I can be live because it's still early. I mean, it's like 1:30 in the morning. I'll probably go to bed at 2 in the morning, but the earnings call actually begins at 3 in the morning. And by the time that gets over, it's going to be 4:30. And I will be in bed by 5, which I don't want to be because then I'm going to be definitely cooked for the rest of the day. And my entire day is going to be pretty much ruined for all the work and the workouts that I have to do. So Templehoff says it's all my fault. But yeah, majority of people, 77%, are expecting a big miss from Tesla. Let me just open up Tesla's earnings here. So investor relations, and we're going to go over to the second quarter numbers from 2024 as well to have a better idea on what we're comparing against for the company. So this is going to be those numbers. And this is the second quarter 2024 update, right? So revenues came in at just over $25.5 billion, right? So that was the number for second quarter 2024, with adjusted EPS on a non-GAAP basis sitting at 52 cents per share. If you look at what Tesla's expected to report, 22.2 billion, so that's obviously going to be a bit of a decline on a year-over-year basis, and just under 40 cents in earnings per share. So on both occasions, Tesla is indeed expected to decline in both revenue and EPS. We'll find out what these numbers look like. But if you remember, in the past, especially the last 6 to as much as 8 quarters, the biggest challenge that Tesla was facing was the reduction in margins, right? So we continued to see a margin compression. So operating margins kind of bottomed out at 5.5%. So let me see if I can pull it up on our MoneyVest platform. So fundamental analysis, income statements. So we'll go back to, let's say, quarterly, and we'll go back to last 8 quarters. And let's just pull up the operating income line. So you can see that it's been kind of hovering and it's been selling off a little bit down to just under 500 million as of the quarter ending in March. But the operating margins did recover after that 5.5%. Second quarter, we creeped up to 6.3, which was still lower on a year-over-year basis. But of course, quarter over quarter, we pushed back up. And now the question is, are we going to see a higher number, a similar number, or a number that's actually worse than the previous quarter? So markets closed. In front of you, I've got both Tesla as well as Google. So Google is going to be right about here. We've got the 5-minute chart, and this is going to be Tesla. Again, earnings are going to be coming out, I believe, at 4:20 p.m. Eastern. So we've got another 15 to 20 minutes until earnings are going to be released for these companies. But we're going to be monitoring it live to see what those earnings look like for both of these. And again, Google is expected to report about 94 billion in revenue, with a EPS of about $2.18. And then you've got Tesla reporting around 22.2 billion, with revenues expected at just over, EPS at just under 40 cents for Tesla as well. So I'm going to keep checking on other platforms as well to make sure that we are up to date on what the numbers are going to be. But again, make sure that you drop a like, subscribe if you haven't already, and definitely share the live stream so we can have more and more people join us, and we can take a look at these earnings together. Gonzo says, and there was me believing you on the last video saying no live stream. Still going to be live for the earnings themselves, but will not be live for the call. The call is going to be later. So massive put options on Tesla, as you already know. So Tesla's biggest earnings is on Wednesday at 4:20 p.m. So 4:20 p.m. is when they're going to be reporting in about 18 minutes or so. And we'll see what Tesla has to report. Google's already moving here. So what a pop in Google. So T-Mobile reported 6% beat, and Google, look at the stock go. It's higher 2.2% right now. All right, so looks like the earnings are out. What a move on Google here, 2.2%. Let's go over to the 5-minute chart here. So revenue, $96.4 billion. $96.4 billion. And EPS coming in also with a beat for the stock, for the company here, coming in at $2.32. So $2.32 was the actual EPS versus $2.18. That's a massive beat, and revenue coming in at $96 billion, which was above the $94 billion expectations. Operating margins at 32% advertising revenue coming in at $71 billion. And we also do have about cloud revenue coming in at $13.6 billion for the stock, for the company as well. So absolutely incredible numbers coming out for Google. Let me just pull up the actual earnings. So just give me 1 second and I will pull it up right now. Google earnings, we got the latest, and I am just gonna go right there. There we go. So here we go. So Google coming in at 96.4 billion. That's a huge beat, and EPS coming in at $2.31 for the company as well. It's actually getting a bit of a shakeout. We actually got a nice little pump right at the initial reaction, $196, and we're now rotating back lower on the earnings here. So, but nonetheless, I mean, these numbers are pretty strong, and I'm just going to pull up the actual earnings as well. But wow, what an actual dump here from Google. Down about 1.5%. And if you go back to my market update video, I was actually talking about Google pulling back and Tesla actually rallying. Like I said, I'm not a betting man, but if I were betting, if I were to make some kind of estimate, that would be what I would expect. So yeah, beat on both accounts. YouTube ads revenue also coming in stronger, 9.8 billion versus 9.5 billion expected. Operating income coming in 31.2 billion versus estimates of 31 billion. And then of course the cloud revenue also coming in beats across the board. CapEx also went up quite a bit, from 18.2 to 22.4 billion dollars for the stock as well. So CapEx went up across the board. We got beats for Google. We're still waiting on Tesla, which is moving higher a little bit. Don't forget, 14 minutes until Tesla earnings also come out. So let's look at this. Consolidated Alphabet revenue, second quarter increased 14%, or 13% constant currency year over year to 96.4 billion, reflecting robust momentum across the business. Google Services revenue increased 12% to 82.5 billion. Then we got Google Cloud revenue. Also, these are all beats, by the way. So Google beat across the board, 13.6 billion. That was a 32% increase, led by growth in Google Cloud Platform, and total operating income also increasing 14%. To 32.4% operating margins. We've had a standout quarter with robust growth across the company. We are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of the business, driving strong momentum. Search delivered double-digit growth, and our new features like AI overviews and AI mode are all performing well. We continue to see strong performance in YouTube as well as subscription offerings. And cloud had strong growth in revenues, backlog, and profitability, and our revenue run rate is now more than 50 billion. With this strong and growing demand for our cloud products and services, we are increasing our investments in CapEx to approximately $85 billion for the company as well. So these are the numbers themselves, 96 billion, pretty solid growth. Operating income also jumping to over 31 billion, 32% margin maintained on a year-over-year basis. Net income also jumping to over 28 billion, $2.31 in earnings per share. And this is the segment breakdown. Google search, 54 billion, YouTube ads, just shy of 9.8 billion, and Google network, 7.3. So total advertising, $71 billion. And Google subscriptions, platform devices at over $11 billion. But the stock obviously plummeting a little bit here, down about 2.4% at the moment. So Yeah, Google here selling off down about 2.4 back under 1.190. I actually mentioned this in the market update that I just posted about an hour ago, that this could be one of those buy the rumors, sell the news type situations for Google, because pre-earnings, it actually rallied quite a bit. If you take a look at the daily chart, we did get up to this resistance of 192, and pre-earnings, we actually had a very, very strong momentum. Of course, it's been on this higher high and higher low pattern. But we are seeing that resistance and a little bit of a gap down after earnings from of course, the stock. So support level right now is going to stay put at 182. So in case we get a bigger breakdown, next support, next target is going to be closer to $182 for Google. So those are the earnings for Google, and now we're waiting on Tesla. Tesla is going to be reporting, but let's just quickly come back to a few other stocks as well. Let's see if they've reported. IBM, so again, Alphabet here, beat. We did get the EPS down quarter over quarter by about 18%. T-Mobile reporting beats across the board, 6% on EPS, 1% on revenue. And of course, IBM is also coming in with strong beats here, up 6% against the expected numbers of $2.80, and revenues coming in shy of $17 billion, up across the board, year over year and quarter over quarter for the company as well. So, but now let's on to the big one. Tesla is going to be in about 10 minutes right now. 10 minutes. ServiceNow was also supposed to report here. Let's just quickly take a look at that stock here, up almost 2% right now. And let's take a look at IBM. IBM here absolutely destroyed, 4.6% lower on the back of these beats, and also increasing across the board year over year and quarter over quarter. That's one of the things that I love about the market, is that you can never know how the stock's going to react despite the earnings coming in strong. It's a lot about perspective. It's a lot about sentiment in the short term. Long term, of course, the market's purely driven by fundamentals and the actual financial performance. But in the short term, man, it is purely a sentiment and perspective play. So that's where we are. CapEx, Google has been a major laggard. That is true. I think Google and Apple have been two of the major laggards this year. It's essentially flat, but after today's sell-off, we're seeing probably it be down on a year-to-date basis. Tesla's moving. Let's see if you can find something. They usually report at 4:20 p.m. This could just be the pre-earnings volatility. So again, adjusted EPS expected at around 40 cents, with the revenues expected at 22 billion. Google is starting to recover a little bit. There goes Tesla, 336. It's really moving now. Let's see, 1%. By the way, we've got a poll going on. How many votes do we have? We've got 326 votes. Make sure that you participate. And we got 68% expecting that Tesla's going to miss expectations today on revenue and EPS. So make sure that you participate on that poll. I want to see a lot of votes so that we can have a pretty good idea. So Tesla earnings are also out. We got in line in EPS, and revenue was a beat by over 2%. But of course, everything is indeed down. So Tesla numbers are also out. Let me just reload this page, and boom, there we go. EPS coming in at 40 cents per share, with the revenues at 22.49, almost 22.5 billion. And that was a beat. That was actually a beat from Tesla. That's incredible. That is actually very impressive. The stock's not moving much. It kind of following the same exact chart as Google. Same exact chart. It popped right on the earnings. It dropped 1 minute after. And we'll see if it actually follows this right here, if it actually recovers. But Tesla is not reacting as much. It is essentially flat right now. So let's wait and see how the market's reaction is going to be. But these are the numbers. EPS was down 23% year over year, and revenue is down 12% year over year. But both of them are up quarter over quarter. and revenue was a beat, EPS in line with expectations. Overwhelming majority, 68%, were expecting for Tesla to miss. That's crazy. But yeah, Tesla did surprise on the upside. Google's recovering now. Google's only down about 0.5% at the moment, so that's good to see. And again, the numbers are out for Tesla. People who are joining us now, both Google and Tesla earnings are out. Google beat on every single account, increased the CapEx budget as well, but Google Cloud, advertising, search, everything moved in the right direction and pushing higher. And Tesla here also beating on revenue, coming in line with EPS, but of course down on a year-over-year basis on both accounts, but up on a quarter-over-quarter basis as well. So that's where we are for these two stocks. And of course, both of them seem to be non-reactionary, as Google's down about 26 basis points and Tesla is not really moving much at the moment. So, okay, second quarter 2025 shareholder deck is now available. There we go. Let's break this down and I'm going to be off to bed. Let's do this. So this is Tesla's second quarter 2025 update, which has just been released, and Tesla is moving higher a little bit, 1.3, 1.4%, not too much. A few things that I really want to go over first is the operating margin, which seems to have increased to 4.1% quarter over quarter. So that's a good sign. And also EBITDA margin has also increased 15.1%, and GAAP gross margin. That is another really good metric that Tesla is able to increase. For the last couple of quarters, we were in the 16s and we're now back at over 17%, with revenue sitting at just under $22.5 billion, gross profit $3.87 billion, and of course 17.2% is the actual margin for Tesla. Now, if you come over to operating income here, operating margin 4.1%, adjusted EBITDA 15.1% margin, 3.4 billion, and net income obviously coming in at 1.17 billion on a GAAP basis, non-GAAP sitting 1.4, and EPS at 40 cents, which was in line with expectations. Free cash flow did decline quite a bit. I mean, we're now looking at less than $200 million worth of free cash flow. But again, we had the Model Y retooling, more expansion towards FSD, not to mention, of course, capacity increase as well. So there's going to be a lot of capital expenditures for Tesla. But 410,000 total production, 384,000 total deliveries, storage deployed 9.6 gigawatt hours, and coming over to their summary themselves. So just under $1 billion in GAAP operating income. Q2 2025 was a seminal point in Tesla's history, the beginning of our transition from leading the electric vehicle and renewable energy industries to also becoming a leader in AI and robotics related services. Our first robotaxi service launched in Austin in June. While the service is limited in initial scope, we believe our approach to autonomy, a camera-only architecture, which a lot of people have argued and criticized over the years, with neural networks trained on data from our global fleet of millions of vehicles, allow us to continually improve safety, rapidly scale the network, and improve profitability. So definitely going to hear a lot of comments from Elon Musk on robotaxi and that statement itself. But Tesla here up 1.3%, 336, and Google here slightly down about 1% at the moment. We continue to expand our vehicle offering, including first builds of our more affordable model in June, with volume production planned for the second half of 2025. I think this is going to be a big uplift for Tesla, which is a more affordable model. I think this is really going to kill a lot of the competition. If you're able to buy a Tesla for like $20,000, $25,000, I think that would be a game changer for Tesla, for EVs, and for just, Tesla's dominance in this space. Additionally, we continue development of Semi and Cybercab, both slated for volume production in 2026. The energy business is more critical than ever. The availability of clean, reliable energy is necessary for economic growth and an imperative for the development of commercialization of AI-enabled products and services. Despite sustained uncertain macroeconomic environments resulting from shifting tariffs, unclear impacts from changes to fiscal policy, political sentiment, we continue to make high value investments in CapEx and R&D while ensuring a strong balance sheet as well. Let's just come down to the balance sheet itself and take a look at where we are. So energy generation and storage also hitting new all-time highs as of second quarter 2025 for the company in terms of revenue and also in terms of deployment in gigawatt hours, sitting at just over 36. Cash, sufficient liquidity. Let me just come down. These are some photos and pictures, obviously, that they share. That's the Tesla diner, now open for charging, dining, and entertainment. Damn, largest supercharger site. It's in California. 168 stalls powered by solar and megapacks. Tesla's 8th million vehicle. These are the key metrics. Let's just come down to the balance sheet as well. So you got cash and cash equivalents sitting at $36.7 billion for the company. We got total current assets sitting at about 61 billion. So both of these line items increased on a, well, cash and cash equivalents slightly decreased quarter over quarter, but is substantially up year over year. And total assets are sitting at 128 billion. So those are up on a year over year basis. Property, plant, equipment also increasing to 38.5 billion. And we've got the digital asset line, as you can see right there. So you can see as a result of the adoption of the new crypto asset standard, previously reported quarterly periods in 2024 have been recast. So that did increase quite a bit from 951 million to now sitting $1.2 billion for Tesla. Those digital assets, again, as part of the adoption of the new crypto asset standard for Tesla. And long-term debt is what I'm going to be concerned about here. Tesla's really been low on long-term debt. We're sitting at 11.5 billion in long-term liabilities, and debt is going to be sitting at around $5 billion. So again, very strong net debt position, which is negative. The company's got way more cash than debt on the balance sheet. I think operating margins expansion, revenues coming in much better than what the expectations were, EPS in line, gross margin expansion, and of course the adoption of artificial intelligence. I think all of those things is much better than what I had expected from Tesla. I was really kind of expecting a kitchen sink quarter from the company where it was going to be reporting some pretty dreadful numbers, but I think all in all, Tesla did really well despite all the uncertainty around tariffs and Model Y retooling and all the damage of the brand and Elon's affiliation in terms of its political career. A lot of things happen, right? There's a ton of things happen in the second quarter. We literally started the second quarter, April, with just these tariff overhangs. Markets were in complete disaster. And despite all of that, I think Tesla fared up really well in overall revenue, earnings, margins, and of course the overall landscape for future execution. So that's going to be it for today, you guys. I really appreciate you all joining in. Both companies have reported and earnings calls are going to start in about an hour, which is going to be pretty late for me, but it's almost 2 a.m. here. So I'm going to get some sleep. Thank you so much for joining. Make sure you watch the market update video as well. That's going to be super important because it goes over a lot of different things related to the market fundamentals, technicals, valuations, everything. So thank you so much for being here. As always, make sure that you drop a like, subscribe if you haven't already. And again, link's going to be down below if you're interested in joining us in our MoneyVest community. Real-time trade alerts, members-only videos. You can engage with hundreds and hundreds of global traders, investors in our Discord, learn from each other, share ideas, find support. And again, it's a really, really close-knit community. We're getting to know each other every single day. We're having a lot of fun. We're making a tons of money. And that's what it's all about. So link's going to be down below if you're interested in joining us. Thank you so much, everyone. Have a great day. I'll see you all in the next live stream. Take care.